Hi, everybody. Welcome back to Aux Talks. As always, I appreciate you watching the show. Thank you for hitting the like button, the thumbs up button, and share the videos. And please subscribe to the channel and be part of this growing community. Today, I want to discuss the state of the housing market in this country. I will discuss both the existing home sales, and then this morning was released the new home sales numbers. Before I start that, I wanted to share with you in the last few weeks, I've been seeing a marginal uptick in real estate disputes that have been coming across my desk from mostly sources of referral, word of mouth business. But it's interesting to me because I've been watching this develop over the last few weeks, and what it makes me think about is exactly what happened in 2007, 2008, really for about 3 years, from 2007 to 2010 or so. That was the great financial crisis. That's when the stock market was crashing, the housing market, mortgage market was crashing, people were going bankrupt, losing their minds. Those were years in my law practice that were phenomenal years for me. And yes, it was when a lot of people were suffering and having tough times. But the point is, I saw more real estate disputes on my desk during those years than ever before. And it just comes down to transactional matters, earnest money deposit issues, people wanting to back out of escrows and cancel, and then they fight over the money. You had a lot more claims being made against agents and brokers for shenanigans. You had a lot more non-disclosure claims being brought, failure to disclose defects with the properties. I'm seeing all that start to happen again, guys. So I'll keep you updated, from the on-the-ground perspective with my real estate law practice here, but it's not good from that perspective. It makes me think exactly what was happening during those years when things were crashing. So let me jump into the story I saw today from Wolf Street. I thought I did a fantastic job of analyzing and summarizing the existing home sales situation in this country. I believe that news came out yesterday in terms of the actual data. It says demand destruction. Demand for existing homes is wilting further despite surging inventories and spiking supply. Much lower mortgage rates, and much lower mortgage rates. They hit a 2-year low at the time these sales were made. It says sales of existing family houses, condos, and co-ops closed in September dropped to a seasonally adjusted annual rate of 3.84 million, the lowest rate of sales since the worst 3 months of the housing bust. And it says down by 3.5% from the crushed levels a year ago, down by 38% from September of 2021, and down by 29% from September 2019, according to data from the National Association of Realtors, the NAR today. It says, but the impact of the recent spike in mortgage rates is still to come. These were sales that closed in September, but were made in prior weeks and months when mortgage rates were much lower. Mortgage rates bottomed out in mid-September, and then it says slowly ticked up after the Fed's monster rate cut. They didn't start spiking until the beginning of October, which will show up as a further hit to the closed sales data in a month or two down the road. It says actual home sales in September, not seasonally adjusted and not annual rate, dropped to 331,000 homes. For the first 9 months, actual sales fell by 2.8% from the already crushed levels of the first 9 months last year. It says, so we updated our estimate for whole year sales in 2024, using the 9-month year-over-year decline as factor to estimate the remaining 3 months of the year. Today's sales figures push our estimate, it says, below the 4 million mark to 3.97 million sales, and that's the lowest, listen to this, since 1995. Go back and do your research in terms of what was going on in 1995. It says too high prices destroy demand, which is the fundamental economic principle that even home sellers cannot escape. Okay, and it shows a chart of annual sales of existing single-family homes, condos, and co-ops estimated for 2024. And look at this chart. We're in the light blue section right over here right now. And look at the comparisons. You have to go back to the great financial crisis there. And then, of course, the 1995, 1994 housing recession, depression there. Okay, so look at those numbers. We are back to levels seen in the mid 90s and then in the 2008, 2009 timeframe. It says unsold inventory jumped to 1.39 million homes in September, the highest in 4 years, and up by 23% from a year ago, according to the NAR data. Importantly, inventory jumped in September when it normally falls in September. Inventory, it says, normally peaks in June and then declines every month for the rest of the year, with the low point, it says, in December. But this year, every month since June, inventory has risen instead of falling. Supply, it says, given the wilting demand, jumped to 4.3 months at the current rate of sales. That's up 27% from a year ago and the highest for any September since 2018. It says the median price by the NAR of existing homes has exploded by 50% since the beginning of the pandemic in early 2020. Most of it in the first 2.5 years, fueled by the Fed's interest rate repression and free money. Okay, we've discussed that often on this channel. It was the craziest 2.5-year frenzy ever in the housing market, and those now way too high prices have destroyed demand. Buyers are on strike. It says they're staying on strike. But here comes it says now that the NAR, National Association of Realtors, tries to blame something other than the way too high prices. And listen to this. I think it's very interesting. Last year, NAR, it says, blamed the inventory for the collapse in demand. And then it blamed the surge in mortgage rates for the collapse in demand. But this year, inventory surged and the mortgage rates dropped. So it says both of those excuses now are out the window. So now it's blaming, what do you think? The election. Quote, perhaps some consumers are hesitating about moving forward with a major expenditure like purchasing a home before the upcoming election, the NAR said. That was yesterday. So it says much lower prices would stimulate demand and commissions for realtors because there'd be more sales. But instead, the NAR has started the long wait for wages to catch up with a 50% spike in home prices, right? And NAR says, with wage growth now outpacing home price appreciation, housing affordability will improve, it said. Guys, I can leave your comment below. How much do wages have to go up to bridge the gap with a 50% run-up in the value of home prices? I think that's probably, it's never going to happen. The median price of single-family houses fell to $409,000 in September, the third month of seasonal declines from the seasonal peak in June. It says in some metros, prices have plunged, such as in the Austin, Texas metro area, 20% from the peak, while in other metros, it says prices have risen to new highs, such as the New York City metro. Says, but in all metros, they spiked insanely from 2020 to 2022. But look at, what will bring this back is when prices start to fall, okay? There's always, something will always sell at a given price. And when you start seeing the pain threshold of these sellers get to the point where they have no choice than to slash their prices, folks, to get these houses sold. Some of them are not even their primary residence. Some of them are, let's say, investment properties. Some of them, they bought a new house before selling their old house. There's going to come a moment where this switch is going to get flipped, and all the sellers are going to run for the exits. Okay, and what do you think is going to happen? The market is going to collapse. Again, this is not. I'm not a realtor. I'm not an appraiser. I'm not a financial expert. I'm just telling you the way this looks to be shaping up. It says northeastern U.S. sales fell to a seasonally adjusted annual rate of 460,000 homes, second lowest since the 1990s. And just a hair above July of 2010. Midwestern United States, sales fell to a seasonally adjusted annual rate of 900,000 homes, the lowest since the housing bust. The Southern United States, sales fell to a seasonally adjusted average of 1,720,000 homes, the lowest since the housing bust. And the Western United States, in the West, says sales ticked up to a seasonally adjusted annual rate of 760,000 homes, a little higher than some months in 2023, but beyond that, the lowest since the 1990s. So that is covering, and I'm going a little bit long today, I apologize, bear with me. That's covering the existing home sales. This morning, new home sales data was released, and it says with existing, out of the Zero Hedge today, with existing home sales re-slumping back to the lowest season-adjusted average since 2010, hopes for the U.S. housing market remains in the new homes market. Says, and hope remains alive apparently as new home sales rose 4.1%, and that's the noisy year-over-year data is saying it's back at 6.3%. Total new home sales is 738,000, the highest since May of 2023. But listen to this. It says the last 3 months have been significantly downwardly reduced. There have been significant downward revisions to new home sales over the last 3 months. Okay, so again, this is the government data. We got to take it with a grain of salt. Okay, but the closing, it says this: what will happen to prices now that the Fed has started cutting rates? Spoiler alert: this rebound in new home sales is over. It says. And, my thought is this, yes, if the rates continue to come down, the incentives that these developers now, they're getting people in the door on these new home sales closures. They're getting people in the door because they're offering buy down in rates, right? But if the rates start to come down by Fed cutting them, what are they going to have to put on the table to entice these buyers coming in the door for the new homes, right? And we've already discussed before, there's always so much appliances, tile upgrades, things of that nature that these developers or the developers can offer on these new homes. So I hope you guys found this helpful today, and it's just we got to keep our eyes open to what's going on, because there's going to come a time, and we're probably near it. And that was the idea for the thumbnail today. Near the edge on this, where people are going to start running for the exits. And if you got dry powder, if you've been smart with finances, you've kept your credit score strong, it might be an opportunity. Not now, not financial advice, but there'll be opportunities for people that have been smart and are prepared to take advantage of it. It's going to be a world of hate for a lot of sellers, I think. But with that being said, again, thank you guys for watching and sharing. Talk to you all soon. Bye.